Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the areas that was certainly impacted by tariffs had been retail. And they import a lot of the stuff that we all wear from Asia, from China, from areas of the world that are subject to tariffs. So we're going to get a sense of how this might change the game here, this Supreme Court decision today. We welcome Poonam Goyal. She covers all the retail companies for Bloomberg Intelligence. Poonam, what's your initial thought here from the retailer's perspective to the extent that a lot of these tariffs are going to be rolled back?
Yeah, I think, look, it's good news for retail because at the end of the day, their costs will go down. These tariffs caused unnecessary stress in the supply chains, caused retailers to raise prices. It lowered their margins. So all that is now set to reverse. We still don't know what the magnitude of this will eventually shape out to be. You know, there's our analysts here on the government side think that while these have been overturned, you don't know what else could be added. So I wouldn't say we go to zero. That's probably not happening. But I do think that as these tariffs get overturned and as costs drop for these retailers, we should see a pickup in margins in 2026 and also a pickup in demand because, you know, the consumers for a long time, or at least over the last year, have been very concerned with inflationary pressures and just prices going up. So all that will help hopefully ease demand too.
You mentioned prices going up. Do we know of any companies, any brands that raised prices because of tariffs, where they made that link very explicit?
Yes, Nike was one of the retailers that had explicitly said that it's raising prices, not on everything, but on goods that were over $100, notably over $150. They had taken a mid-single digit price increase. So prices did go up across retail from tariffs. They didn't go up 20-30%, but they did go up in the single digits, mid to high single digits.
You know, the New York Fed is out with a report recently saying that about 90% of the tariff costs were borne somewhere in the U.S. chain, whether it was the importers, the companies themselves, consumers, and maybe only 10% by exporters.
Yeah, Kevin Hassett disputes that, of course.
Yeah, of course that he does. But I'll go with the New York Fed. They're pretty solid in their numbers. So from your perspective and the perspective of the retailers, Poonam, how much do you think like the Nikes of the world kind of took in their margin versus passing along to consumers?
Yeah, I would say that I think there was a shared cost across the tariffs between the suppliers and the manufacturers. So it wasn't 90-10. I find that hard to believe because if that was the case, a mid-single digit price increase wouldn't be enough to offset the cost pressures. It'd have to be higher. But that said, I do think that, they did see their costs rise, and they did try to offset it not just through price increases, but also through efficiencies within their organization, whether it was across payroll, whether it's through technology. You know, we've heard a lot about these AI investments, and they've really helped improve efficiency across the organization, but we haven't seen that in the numbers. And my answer to that is it's not in the numbers because it's really just been helping offset these incremental pressures from tariffs.
We've seen companies like PepsiCo move to cut prices on some of their products, their snack products. And I'm not comparing snacks with clothing or sneakers, but if a company like Nike raised prices because of the tariffs, is there any world in which it might reduce prices or lower prices because tariffs were removed?
So I think the consumer is expecting prices to go down when the tariffs are removed. The big question is, if prices went up, let's say 10%, are they going to come down 10%? That typically doesn't happen. They don't necessarily drop to the same extent they went up. But yes, would you have some relief from the cost increases? Sure. I think retailers like Walmart that really push the pedal on price much harder and care about offering that incremental value to their customers, that's what they stand for. Those are the retailers that are probably going to push the pedal much harder on price when they get the relief from tariffs.
So what's just broadly defined right now, step back a little bit, Poonam, what's your view of the consumer here based upon kind of the results you've seen from some of the retail companies you follow?
I think the consumer is stretched. I think they're under pressure, but they're making choices. They're being selective. They're shopping at retailers that offer them convenience, that offer them speed, and that offer them something differentiated. And I think that's been the story for a little while now. I think that continues. So retailers like Amazon have been doing well because they offer both value, convenience, free shipping, and they've done well. Walmart, we heard from, they also did well on their value proposition. So I think it's those retailers that really stand out in the crowd, or those that have a fashion element, whether it's Urban Outfitters, with just the right assortments that's attracting these younger shoppers. They're the ones who are doing well.
What does this mean for furniture companies like Wayfair? And I recognize that Wayfair doesn't make a lot of its own furniture necessarily. It's outsourced a lot of that. But have they been explicit in how much tariffs have hurt them? Because most of their manufacturing is not done in the United States. I'm guessing it's done overseas.
It is done overseas, but I think with Wayfair, it's a little tricky because, as you said, they are a marketplace, right? So when you think about Wayfair, they have thousands of suppliers to choose from, or manufacturers or sellers. And if the seller wants to make a sale, they can go from one seller who may say the sofa is $1,000 and I have a 50% margin on it. But then there's seller number two who says, well, you know what? I'll take a 15% margin on it because I want to get the sale. So the diversity and just the choice that they have on who they bring on board to offer the compelling prices has helped them offset a lot of these tariff foes that others that are vertically integrated have to deal with directly.
Poonam, we heard a lot of companies in retailers, but just across the economy, talk about shifting their supply chains to maybe parts of the world that are less encumbered by tariffs. Have you seen that in the retail space? Like, is Nike making shoes in Vietnam and not China or anything like that?
Absolutely. The supply chain shift has been going on since the first round of tariffs, actually, and it's only been pronounced since last year. We expect supply chains to continue to be diversified. The only difference with this ruling being overturned is that the urgency has somewhat been moderated, so you don't have to be as reactive as you would have been last year. You can take your time and be more strategic about where you want to be diversified. But I don't think that just because the tariffs are overturned, now everything will, go back to China. I think the diversification step up is here to stay.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
As we look through the different sectors that are impacted by this Supreme Court ruling, basically determining that President Trump's tariffs under the IEEPA provision are illegal, let's take a look at what this means for the auto industry. Steve Mann is our Global Autos and Industrials Research Analyst. And Steve, I'm looking at the top live blog that Bloomberg makes available to our clients. And one thing that many people may not realize is that the ruling does not pertain to the main U.S. tariffs affecting the auto industry. Walk us through what is affected when it comes to auto tariffs by this ruling.
Yes, Scarlet. Bottom line is there's no impact on the auto industry. The auto industry, the tariffs on the auto industry is under the Section 232 of the Trade Expansion Act of 1962. So it's not put in place by the emergency powers. So the baseline of the 25% tariff on auto imports is still there. Now, Trump did renegotiate with countries like South Korea and Japan to bring it down to 15. But for the most part, consumer will still feel the impact of these tariffs of, close to $1,000 to $3,000 per vehicle on average. The other thing that I want to highlight is it's the steel and aluminum import tariff of 50%. That's also not impacted by the Supreme Court ruling today. And that also has a huge impact on, the cost for the automakers.
So, Steve, what have you seen so far for the automakers and how they're dealing with these higher tariff levels? Are they moving production? Are they changing maybe some parts of the supply chain? What have they been trying to do to mitigate the tariff costs?
That's a good question, Paul. I think the reason why Trump went with the Section 232 approach is is that the auto industry, given its huge manufacturing base, is critical to the economy. It's critical to national security. He does want to bring a lot of that manufacturing back into the U.S. And that's what we've seen with the U.S. automaker. For example, GM actually have shifted some of the Silverado production from Oshawa, Ontario, back to the U.S. And you've seen Honda, Hyundai from South Korea making huge investments in the U.S. to set up manufacturing base. So I think that's still the course for the administration, and I think we'll still continue to hear more, probably in the next few years, more of that reshoring auto manufacturing back into the U.S.
So how do you see this moving forward? How does a GM plan for the next year, for the next 4 years, the next 10 years?
Yeah, I think they're going to have to revisit, and they're still doing that. They have done that already, revisit the supply chain, right? I think the low-hanging fruit was moving some of the auto assembly back to the U.S., but that's not enough. If the supply chain is not close to where the cars are made, freight costs will go up. There will continue to be potential tariffs in some of the components. So you're starting to see, companies, especially from South Korea, automakers from South Korea and Japan, actually asking the supplier to shift some of that production into the U.S. Just to cut, some of the freight and potential tariff costs on the auto parts. So we're going to see a whole lot of changes in the supply chain. I think one of the things that we also are keeping an eye on is the USMCA, the U.S.-Mexico-Canada Free Trade Agreement. That's up for review this year. That's going to have a much bigger impact on the auto industry. So we'll see how that plays out.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I do want to bring in Dan Ives. Dan, of course, is the noted analyst, the global head of technology research at Wedbush Securities, to get his take on what we're seeing in tech and whether, Dan, this SCOTUS ruling is kind of just risk on for the market overall, and that means a big lift for the biggest part of the stock market, tech, or whether this is specifically good news for tech companies.
Yeah, this is specific good news for tech companies because of the supply chain. Because the biggest worry is that tariffs, what that could do in terms of the data center build out, AI build out, chips, everything that we're seeing with China. Look, there's going to be other ways that they're going to try to go around this 232, Section 301. The reality is it's a huge blow to the tariff policy, and it's very bullish for tech coming out of the gates. That's going to be the initial take.
So, Dan, it's been a little more than roughly a year that all companies have been dealing with this tariff uncertainty. How have the technology companies who do have a global supply chain, rely a lot on parts of Asia, how have they kind of adjusted here?
Look, I mean, Apple has moved a lot to India. Others have, had to make significant investments in the U.S. and also look to diversify their supply chain. But as we've talked about a lot on the show, like the vast majority of the supply chain will continue to be cemented in Asia. And where you had companies starting to look at diversification, increase cost, was this going to potentially, impact the supply chain? That's off the table now. And that's something, look, big tech companies, what they'll say publicly behind closed doors, they're a huge sense of relief right now because of this.
Interesting. Given that so many of the big tech CEOs have really aligned themselves with the president, what does this mean for the big chip makers that are outside the United States, the TSMCs, the Samsung Electronics of the world?
I mean, it's extreme positive for them because, when you think about each of them, the question there was, how is that going to impact them from a policy perspective, from a tariff in terms of coming into the U.S.? And then you start to think about manufacturing, you'll continue to have some manufacturing move to the US. But this is actually going to put the brakes on some of the policies that some of these tech players had. Look, there's going to be Section 232, Section 301. There will be other areas that go about it. But for big tech, supply chain, chip players, memory players, it's a clear positive. There's no way to really go against that thesis.
Dan, your world has been rocked over the last several weeks by AI and the impact some people are speculating it may have on certain parts of the marketplace, including software companies, particularly software as service companies here. What's the current thinking as you talk to investors these days?
Paul, I'm calling it's the AI ghost trade, because you're trying to fight a ghost, because of the view that this is going to massively disrupt software. It's going to massively disrupt cybersecurity. And I've talked about it's the opposite. I think it's the most disconnected trade that I've seen in my career on Wall Street in terms of what's happened to software stocks now. But again, like we talk about fighting a ghost, there's going to be like boxes that are checked, whether it's OpenAI in the $100 billion, whether it's NVIDIA earnings next week, whether it's Apple on AI, whether it's circular financing, software companies showing monetization. This is going to happen. But right now you're fighting a ghost and the bears are loving it. But again, that will be short-lived in my opinion.
That might be the case in the equity market, but we're seeing private credit, leverage loans really come under pressure because of all those loans to a lot of software companies, many of which don't have investment grade ratings. Is credit driving the concerns in the equity market? What's leading what, Dan?
Yeah, I mean, look, if you look at Blue Owl, right? I mean, obviously there'll be like some concerns there, but then on the other hand, look at Apollo and others. So I think if you look relative to some of the exposure and what the credit market's telling you, it's still very healthy from a credit perspective. But look, no different than we saw with banks a few years ago, Silicon Valley Bank and others. There's going to be hypersensitivity to anything that happens here. But the reality is that these companies have more cash in a lot of countries when you actually go through it. The point is, like, they're going to continue to do it. But look, Scarlet, it's like if there's 5 people trading CDS instruments for Oracle in their basement, that's going to be extrapolated, right? And we saw that like a few weeks ago. It's just a reality. Like, we're going through a ghost trade. It's an AI ghost trade, and you got to navigate through it. But net today, it's positive for tech, and that's one step forward.
Hey, Dan, you spent a lot of time in Silicon Valley, and it's just a great place to get a sense of kind of where the tech investment mindset is here. Has tariffs dialed back kind of the risk profile of some of the good folks on Sand Hill Road as they think about what technologies to fund? Is it tempered it a little bit, and could today's ruling be a major change?
Yeah, I think tempered, and maybe it put like a little question mark in the back of the mind in terms of what was going to be the next policy, what was going to be the next threat, specifically when it came to supply chain, how companies are positioned. You can't just snap the fingers and change your supply chain. We're talking about things that could take 24, 36 months. This ruling, it does clear the path a little more. And I think that's something that's a positive as you're in a unprecedented build out of a fourth industrial revolution in AI. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Well, in the summer of 2025, Barry Ritholtz spoke with Neil Katyal, the lawyer who argued the case against Trump's tariffs in front of the U.S. Supreme Court. Here's what he had to say about their legality.
The president has an easy fix if he wants to. He could go to Congress and seek approval for the tariffs that he wants. That's what he did the first time around. And as we talked about last week, that's something that failed in Congress. And so maybe that's why he doesn't want to do it. Obviously, these tariffs are highly unpopular. But nonetheless, the Congress is controlled by his party. And that's the place to start. Don't run to the federal courts to do what you can't do in Congress.
That was Neil Katyal, the lawyer who argued the case against Trump's tariffs in front of the U.S. Supreme Court. He was speaking with Barry Ritholtz. Barry Ritholtz joins us here. He is the founder of Ritholtz Wealth Management and host of Masters in Business here. Barry, what do you take away from the Supreme Court's decision here today?
Yeah, long overdue, long awaited. I think the market always has a hard time digesting data inputs that are kind of outside of their sweet spot. So when we get an FDA approval or the announcement of a merger or corporate earnings or non-farm payroll, hey, the markets are really good at integrating that into prices. I suspect it's going to take a little while for this to get digested. My personal expectation is there are a lot of winners and losers from this. I think that the winners are going to be obviously the retailers, because prices have gone up. We've seen a ton of different research that says somewhere between 90 and 95% of the cost of tariffs falls on consumers, essentially making them a VAT tax. So not only retailers, but manufacturers like Caterpillar and Deere, what aren't affected by the Supreme Court ruling, and we heard one of the prior guests say this, is all of the tariffs on U.S. auto manufacturers, on steel, on aluminum, that's a whole separate law. That's not the IEEPA law. That's a 232 law, and that's still up in the air. There's no resolution from this case for GM, Ford, U.S. Steel, et cetera. But when we look at companies like Toyota or Costco or Walmart, that Toyota filed a refund because all of the parts that either Toyota proper ships to their U.S. manufacturers that have a big price increase, this is going to work to those companies' benefits.
So I guess the question is for the markets, Barry, is, how much of a profit impact could the relaxation of some tariffs have on corporate America? Because I'm not sure we've got a great handle on how much it impacted them on the downside in the last several quarters.
Well, it just goes to show you the counterfactual is always what would have been otherwise. And look, the president inherited a strong economy, a robust economy with markets at or near all-time highs and profits at or near all-time highs. And so even pick a number, 175, 200 billion in tariffs that have been collected already over the past 10 months, arguably a lot of that comes right out of the bottom line for corporate America. So when we see these tariffs get refunded, and I'm fighting my way through the decision, reading the decision to figure out, all right, if you're a big company, you certainly have corporate counsel and resources to go through the process to apply for refunds. If you're a smaller company, I'm trying to figure out if how you go about this. Do you have to join some sort of consortium or maybe even a class action suit? Because it's not just like doing an online tax form and getting a refund. It's a whole process.
It's definitely a heavy lift for companies that barely have an HR department, barely have an in-house lawyer.
Well, I'm coming up with an app that anybody could use. Wouldn't that be good? Get some smart person.
AI can solve this.
Yeah, AI can solve it, exactly.
Well, let's wait for AI to solve just that. Barry, you are fantastic at kind of thinking ahead, thinking around corners, looking around corners. What do you want to know? What are the questions you're asking right now to kind of help us get through this period of uncertainty, a new period of uncertainty, once we kind of get through and start to understand how things move forward, whether the president can move right away on the tariffs under the different sections, or whether he's going to backpedal and kind of rethink everything?
So, I've been trying to think about second and third order magnitude results from this. It's not just the pebble you toss in the pond. It's the waves that bounce off of the other waves and how this works. I'm not a political expert, so I'm always reluctant to venture into that space, but staying with market and economic factors. So a couple of things are very positive. The dollar in 2025 had its worst year since 2017. Not coincidentally, 2 years that were both first year of President Trump's tariffs, first year of a new tariff program, first year of a Trump presidency in each of these cases. And the dollar fell 9.9% in 2017, 9.3% last year. This arguably could be very strong for the dollar, which would begin to call into question the rally in precious metals, gold especially. Silver has kind of been trading crazy. You almost have to look at it as a smaller, wackier little brother of gold. But I wonder if this caps the rally in gold. That's number one. Number two, I have to think that everybody that's engaged in any sort of tariff negotiation is going to rethink it and decide, hey, do we want to stick with these tariffs? Do we want to see if we can press our hand? That's going to be kind of interesting. It also, and perhaps most enthusiastically, look, depending on which study you consider, tariffs have cost the average American household anywhere between $900 and $3,000. And I suspect as you go up the economic strata, it's probably a whole lot more than that. That's going to essentially get cut in half or more, depending on what you're buying. If you're buying Birkin bags and Ferraris, you're going to see, and Rolexes, you're going to see your tariffs drop pretty dramatically.
Time to go shopping.
And so this is positive for inflation. This is positive for, the Fed has been warning that, hey, rate cuts are not a sure thing in the first half of the year. This is very positive for lowering CPI and lowering the possibility of rate hikes. All of this could lead to a reacceleration of the economy, and certainly in specific sectors. And I'm thinking in particular manufacturing and retailing and consumer discretionary. Those sectors can all do really well. We may, a lot of people have been talking about the possibility of a recession in the second half of the year. I think the Supreme Court just lowered the possibility of a recession by a not insubstantial percentage. And
Right.
Again, these are all second, third, fourth order effects.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.